exposing the secret sauce in business-to-business marketing. The Tagline Podcast is where real stories meet proven strategies. Let's elevate your business. Real strategies, real stories, real results. In the business-to-business industry, you're not selling to businesses. It's human to human. We break down what works, what doesn't, and how you can truly stand out. Transparency, credibility, growth. Get a behind-the-scenes look at what drives success in business-to-business marketing. Get ready for the next Tagline Podcast powered by the Ably Group.
Today's guest is Devin Thorpe, a longtime champion of impact entrepreneurship and one of the most recognized voices covering crowdfunding and purpose-driven companies. Devin is the founder of Superpowers for Good, a media platform and newsletter that highlights entrepreneurs, investors, and innovators working to solve meaningful global challenges. He's interviewed more than 1,000 founders and ecosystem leaders and previously wrote extensively on social impact and entrepreneurship as a contributor to Forbes. Through initiatives like Super Crowd Conferences, Purpose Built 100, and Super Green, Devin is helping connect founders, investors, and communities around the growing impact crowdfunding movement. So excited to have Devin on today. Welcome back to the Tagline Podcast. My name is Justin Starboard, and I am so excited I get to welcome Devin Thorpe to the show. I've been on your show. This is the first time you've come on ours. Thanks for joining me, man.
Well, thank you. It's such an honor and a privilege to be on your show. I'm thrilled and excited. You're so kind. This is going to be a great conversation. You've got such a great show, so many important guests and such great messages to help people with something that so important.
Yeah. So I appreciate all that you say. Those were very kind words, but really you are, one of the bigger movers and shakers in this whole crowdfunding ecosphere and ecosystem. You founded Superpowers for Good and have an incredible show, which you've had me on. You do this wonderful newsletter that comes out almost every day and sometimes a couple times in a day. Mm-hmm. How do you find time for everything?
Yeah. Well, it takes a team. And I've got a colleague, Chandon, that helps me with a lot of this. So I'm not writing and preparing all of the content, but we have a genuine passion for this stuff. And we genuinely care. And we see that there is just a tremendous opportunity here in this space. And we just believe fundamentally in the power of crowdfunding as a tool for genuine finance. I'm not talking about Kickstarter and Indiegogo. That's great. But when I talk about investment crowdfunding, I see so much more potential. I envision a day when all deals are done this way.
Yeah.
I think the potential is there because this is so much better. The world isn't convinced. I get that. I'm convinced. I'm trying to convince the world that we have something really cool going on. We have a genuine passion. And it's so powerful for kind of the impact-focused folks, like some of your clients. I think of Rise Robotics, won one of our pitch competitions.
Yeah.
We had the Elf guys on the show, to talk about their raise. It's really powerful for companies.
You got a couple
like
of the shows coming out next week, I think, with Dr. Deepak Putra from Rise Up.
That's right.
Jane Lowe and Rob Whitten from Ping, the robotic coffee, fastest coffee in the galaxy.
Yeah, it's fast. It's amazing. Very cool people, very cool clients of yours that are on.
Well, we have it's really funny. I heard it called best yesterday on a webinar. We have a strict no asshole policy for clients. So we try to only work with good people, man. But I want to ask you, what pulled you into crowdfunding? Because, your career, not people can see that you have wisdom right there on your
yeah.
So crowdfunding hasn't been around forever. How did you get into it?
Yeah, so I'm an old finance guy, right? I spent the first half of my career doing finance stuff. I ran an investment banking firm that I started. I was the treasurer of a global company that was a public company. I was the CFO of a billion-dollar corporation, operations around the world. It was a pretty cool life for a while. But my goal from the earliest days of my career was to spend the second half of my career on social impact. And so I have done that by trying to translate my finance skills into helping people raise money and invest better. And so my very first client at my investment banking firm was trying to build an investment crowdfunding site. Now, the regulations at the time didn't really allow for that, but it was clear, this is back in 2000, right? It was clear that the technology could be used for doing crowdfunding. And so my client was trying to get that off the ground. Great guy. It didn't work. Big surprise. He was, 15 years too soon.
Right.
But I had another opportunity come along later, and a guy was building a little Reg D portal. And I actually became a client, invested through the portal a couple of times. Crappy deals, lost all my money. But it was, I've been kind of in this place, passionate about this principle of democratizing capital and giving more people access to the investments and giving more people the ability to raise capital this way from ordinary people, from their friends and family.
Yeah.
I've been passionate about this for a long time, and so it's been exciting to me. I was sort of like a moth to the flame. I just love this stuff.
What do you think is most? I don't think I've actually ever asked anybody this. What do you think is most misunderstood about the crowdfunding space?
Yeah, I think there are two things that compete. One, I think there are remarkably few people who are approaching investing deliberately and with sophistication. And yet there are genuine opportunities to make money here in this space. Now, you have to be wise. You have to do due diligence. You have to do analysis. You can't just willy-nilly throw money at a deal. And there are a few people who are taking advantage of issuers. I don't think it's any or investors. I don't think it's any different than any other investment space where some people have inflated valuations and try to offer unfair terms. But the fact of the matter is, if you scrutinize the deals, you can make money as an investor. I'm convinced of that. And I think that there's not a wide understanding. And you say, well, Devin, what are you talking about? All day long, I can invest in deals that have contract payments to me of 10, 11, 12% returns.
Mm-hmm.
And I look at a stock market that is really kind of looking shaky. And I'm thinking, would I rather have a portfolio of small business loans at 10, 11, 12%, or a portfolio of stocks right before the market goes from 50,000 to 30,000?
Right.
Right. And that happens in the stock market. A 40% drop is remarkably unremarkable.
Yeah.
And so for someone with
just
gray hair or no hair,
yeah, it just looks bigger when the numbers are bigger, right? So 40% is still 40%.
Yeah.
So that's interesting. I like how you talk about the opportunities that are out there, and that maybe part of misunderstanding is that you need to do some diligence on that. That said, how do you do diligence on some of these things when in crowdfunding you can self-proclaim your valuation without it being really checked? And the first, $1.2 million and change, you don't have to go through a huge significant audit. Yes, you have to have a CPA, but it's not, not to say that people are finagling things, but, like you mentioned, maybe not on the up and up, or a little bit of nefariousness in that.
Yeah.
So how do you evaluate those?
We're really deliberate about it, but here's the thing. Kingscrowd does a due diligence report on every single offering. And we focus on social impact. So I do a pick of the week every week. And so our paying subscribers can get access to my pick of the week, which includes a lengthy, detailed due diligence report. But that we don't even start to generate that report until we have actually put it through a variety of screens using a combination of human and AI activity. And we're really proud of our output. So there are very affordable resources for getting third-party analysis of these that would allow you to evaluate the deal terms, like the valuation. The valuation is a tiny part of it, but it is essential. It is essential. You can't, I was looking at a deal just this week, and I loved a lot about the company, but my conclusion was this particular company was raising capital at the valuation I thought it could at best achieve in the future.
Yeah.
And yet it was trying to raise capital there. So I'm thinking the best case scenario is I get my money back. I'm not going to put money into that, even though I kind of like it.
Yeah.
So you have to scrutinize those deals. The great thing is there are tools and resources available to help you gauge valuation. It's always subjective, but it's not hard to find some comps and to begin to look at, what's fair at this stage of investment, right? The company. So this is pre-revenue, really just a business plan and an idea. They probably better not be raising at a $40 million, $50 million, $1 billion valuation. We see that occasionally.
I know. I've seen that too. I mean, from our perspective, we work hard to advise our founders on being in a proper window, right? You don't want to be too high. You also don't want to be too low, but you definitely don't want to be too high. And that said, again, we go back to we want to work with good people too. So that helps us, filter out some of those that have unrealistic expectations. And that leads me to my next thought or question is like, you look at deals from the social impact space, of course, which is such a wonderful lens to view these opportunities through, because not only are you highlighting crowdfunding as a general space, but then going a little bit deeper and the ones that are truly trying to make a difference in the world. And I think that is such a unique avenue to approach this by. So when you're evaluating stuff, what do you look at? Like, the mission, the founder, some of the traction, maybe the structure. Is there other stuff that really gets you excited?
So my approach is to first look for social impact. And I look at that in two dimensions. So first I'm looking, are they doing something that will make the world a better place? That's the first test. If they're not doing something that's going to make the world a meaningfully better place, then I look for a second opportunity for social impact, and that is supporting underrepresented founders. And that includes women. So if we have a founder who's a woman, I'm saying, okay, this one qualifies for further consideration because I just want to support women. Maybe it's a African American, Native American founder, other minority founder. I'm saying, you know what? There's just too much data that suggests they are not getting their fair share.
Yep.
I want to look at this to make sure I'm supporting that community. And so even if there isn't a deliberate social impact, I've invested in dozens of businesses just because I want to support the founder.
Yeah.
Okay, so those are the two screens I do for impact. After I've done with that, then I scrutinize the economics, right? Then I'm looking at what are the deal terms?
Sure.
Are the deal terms reasonable? And then what are the prospects? Is this company going to be able to deliver the goods?
Yeah.
And do they have a reasonable shot at that? And so if I'm saying this, if this is a long shot, right, and they're going to really have to have the moon and stars align, then I also better be convinced that you can give me 10, 20, 30, maybe more X my investment if things do align. If your valuation is too high now, I can't get that return in the future, because if you're raising at $1 billion valuation, I'm saying that's risky. I'm not convinced you can become $100 billion business. You're not Tesla, sorry.
Yeah.
Right. So, those are the kinds of analyses I'm doing, trying to figure out, and so we look certainly at the quality of the management. Do they have the expertise to pull off the business? Are they building a team that has capability and depth? Do they have the right advisors? We look at the whole thing, very much like, a VC would. What I love, love, is despite the scrutiny we apply, it is rare that I can't make an investment every single week in this space. So.
I mean, that is a testament to the growth of the industry as well, where, really since regulations changed in 2021, you've seen an explosion in not just deals, but platforms that offer deals and companies that are now available to the public. And I think that's one of the things that makes what you're doing with Superpowers for Good so important, because you are continuing to put a spotlight on the industry and the investment space, as well as going a little bit deeper. And like I mentioned before, highlighting these companies, these founders, these missions that are in it to really make a global change if they can. So talk a little bit about Superpowers for Good and your vehicle. So I loved your personal, approach to things, but you also have this other platform that has really grown, well, at least since I've met you, for sure.
Yeah, so we're having so much fun. We do the streaming TV show and podcast that comes out every Tuesday and Thursday, Superpowers for Good. I'm just excited. We've seen our audience grow nearly tenfold over the last 3 years. It's just so exciting to me, really, as a host, to see, wow, people are paying attention more and more. That I love it. More and more, the founders who are on the show come back to me and say, we raised money from being on the show. We do a quarterly live pitch. In fact, our live pitch the next one is March 17th. I'm not sure if we'll air this before or after that, but March 17th is or was the next one. And our companies, like the one of our companies that won last year, one of our events, we do a judge's choice and an audience choice. We call that the Super Crowd Award. One was the #1 raise on King's Crowd last year. So I think it was your client, wasn't it? Wasn't it Rise Up?
Yeah, Rise Robotics. Yeah. Rise Robotics.
So Rise Robotics. Yeah, you got two Rise clients. And
I know. Sometimes
my brain isn't big enough to handle that. So we're excited about that. Then of course our business is called the Super Crowd Inc. It's a public benefit corporation, but that our business also hosts the Super Crowd annual events. This year, we're adding the Purpose Built 100. We're going to be ranking the 100 fastest growing businesses. Visit purposebuilt100.com to apply. The application window is opening on the 16th officially.
And that
we're excited.
The highlight. Yeah.
And so we're excited about that. By the way, there's no fee to apply. There's no fee to attend and win. You just get stuff. We're excited about this.
Yeah, that's exciting.
Yeah.
I think the way in which you're building the platforms is also really intentional, and it is to, like you're doing with the Purpose Built 100. It is to showcase the companies that are attempting to make a difference. When you say that you get feedback from companies that you highlight, I know personally from watching Rise Robotics over the last year, we definitely got a bump from the newsletter. Other clients like our Sunstone Health also got a little bit of a bump. And we're starting to see that sort of traction. Is that something that you track for folks that are on there? Because you also don't charge a fee to be on your show or to be a deal of the week, unlike some other newsletters.
Yeah, we're trying to approach this from a journalistic standpoint a little bit. I wrote for Forbes for years, and I got inculcated with some genuine journalism bias. There are things I didn't like about journalism that I've somewhat abandoned. There's a certain rejection of the role of a founder sometimes in some of the impact circles. They want to focus on process and repeatability. And I'm a firm believer that founders are essential and sometimes can't be genuinely replicated, right?
Right.
You can't copy Elon Musk and do it again, right? For better or worse. And so it's,
we won't get into that.
Let's stay away from that. But it is remarkable. It is remarkable what can happen and all. But yeah.
So talk a little bit about the goals you have for this too. I mean, it's and really what you've been able to get accomplished so far, but that you still have in your crosshairs to improve on. What at the end of the day, is this something that you want to sell? Is it something you're going to try to pass on? Are there, is there something from a perspective where, I mean, you've essentially built a syndicate of in a way where people do follow you and then invest when you recommend things, but what are you aiming to build here?
Well, what we're really trying to build is a much larger community, right? We're proud to have 10,000 subscribers. We're proud to have thousands of people watching our show. We're proud to have thousands of people, maybe tens of thousands, attending our events virtually. But that's a tiny drop in the bucket of what this marketplace should be, right? I think about the number of people who work for nonprofits in the country, right? In the country, there are on the order of 10 million people who work for nonprofits. Every one of them, in theory, cares about some measure of social impact, and they have a job, right? So they should be squirreling money away for retirement. Every one of those people, plus millions more, should be paying attention to the opportunity to invest directly in businesses that have a social impact as a part of an ongoing retirement strategy. So if the marketplace should be 10 million, 20 million, 30 million people, I'm just getting started. One of the ways that we're hoping to attract more people is with the Purpose-Built 100. We see this as becoming, in the long run, something that will have the resonance and sort of the reverberation in the marketplace of an Inc. 500 kind of listing, that people talk about this. People are proud to have been on the list and talk about it all the time. That's what we're trying to build. And we feel like that kind of thing can help attract a community of people that is genuinely engaging with enthusiasm in this marketplace and to really make a difference in the world.
Are you thinking with the Purpose-Built 100 that you're going to continue to keep it in the crowdfunding space as well, like people that are actively raising money? Or are you going to open that up, or do you have it opened up to folks that are just, they built a company and it is maybe a B Corp or it is purpose, driven, but they didn't need to go through, or they've already completed, some sort of investment round, or, better yet, it's not something they actually need.
We are not screening at all for capital.
Okay.
So it doesn't matter whether you bootstrapped it or got venture capital. The only thing that we're really checking that has any connection to capital is we're looking for businesses that are still independent. So we're not looking for anything that's a subsidiary of anything else, including a majority owner private equity group. So somebody that's majority owned by a private equity group would not be eligible. Somebody that was bought out last year by General Motors, not eligible. Somebody that was, but as long as you're still an independent company, we're thrilled to have you. We'll test for your social impact. If we conclude you don't have enough, we'll let you know, and we'll give you a chance to appeal our decision. But we're going to try and scrutinize that a little bit to make sure that it's genuine, right? That there is real social impact connected with the business. But at the same time, we're not checking to see, did you use crowdfunding or will you?
Yeah. All right. One of the things that I think is so neat about what you have started to build and what you are continuing to build is your, I think it's one of your passions, and that's interviewing other founders. What is one of the consistent traits that you see? Because I say this all with a caveat or context that, as we've become more involved from the Ably Group and TAG and myself personally in crowdfunding, everybody comes back to me and says, "Oh, it's the founders. We invest in the team," and but like you mentioned earlier, so much of the stuff is subjective. But you've actually interviewed thousands of people at this point and can sort of see the traits that are going to, turn into success, and those that maybe talk a big game but don't have the ability to actually execute. Where's the difference? Like, and what are you seeing?
Here's what I would say in that regard. I've always said that entrepreneurs are optimistic. They're not glass half full people. They're empty glass is full people. Right. And it's because they say, "Oh, I know where to get water."
There's a chance, right? If
I know where to get water. So it doesn't matter that there's not actual water in the cup. It's full. For all intents and purposes, it's full. But that really, there's something more when we talk about impact founders. A lot of people talk about listening and empathy. I think that's a common theme, but the real key is resilience. I think this is something shared among entrepreneurs even more than optimism, but I think it's even more important for social entrepreneurs, for purpose-driven entrepreneurs. It's even more important because I think there are sometimes bigger challenges when you're trying to stick true to a mission to accomplish something that really matters. I think of like your elf guys. Yeah. Talk about resilience. They're coming back, rebuilding out of the ashes, a really great product and business. And so, I think that's a great example of that resilience, that grit. That I think is the most common theme among successful entrepreneurs. Yeah. It's the ones that say, "Oh, well, that's hard. I'm not going to do that." After all, those are not successful entrepreneurs.
Yeah, I agree with you. I think optimism is, it's not that it's not hard to come by, especially in today's social, economic, whatever climate you want to talk, political climate. Nothing seems particularly positive. But owning a business like yourself and seeing these folks have the audacity to ask for investment to fund their dream, I think that it takes a special person to be able to do that. It also takes a special person to be able to create a pathway forward and a vision for how that'll get accomplished. What are some of the thinking of the campaigns themselves, the ones that have been successful? I'm not saying the ones that have come back and raised $5 million in 5 days or something, but that we're just getting started. What are and you followed at this point thousands of deals. What are the ones that have success, or the ones that exceed your expectations? Not like not specific. You don't get into specific ones, but what sort of traits do you see?
Yeah. Well, in some ways, it comes back to the resilience. Of course, I'm looking through a lens that comes through this crowdfunding, investment crowdfunding space. And what I'm seeing is that resilience plays, hand in glove with crowdfunding. Crowdfunding is hard. You cannot be successful in raising capital from the crowd without real work, even if you have help from someone like you. That it's essential to have help from someone who knows what the heck they're doing, like you do. But at the same time, you cannot get away from the responsibility to be doing some of the hard work yourself. And it is hard work. So I see the people who are succeeding are doing that hard work. And some of it's not all about, sweat and long hours. Some of it's about making the ask, right? Going to, your rich uncle and saying, I need you to invest, and $500 isn't going to do it. I need you to be thinking about, rich uncle, putting in 25 grand, 50 grand into this deal to really help me catalyze some success here. That's hard for people to do. I struggle with that. The people who are successful do that and do it well. And that's I think what I see is that resilience manifest in hard work to do the difficult things. Because, in some ways, bootstrapping is almost easier, but it's not always more successful. Sometimes you need capital.
Yeah.
And getting it from the crowd is hard, but sometimes it's the only option. And I see that over and over again. Even very successful entrepreneurs who raise capital from VCs or from angels, and sometimes they can go back to that. They reach a point where they need more capital to reach a milestone that will qualify them for the next round. And they've got to raise it from the crowd, and they've got to do that hard work, and they do it. That's a linchpin thing that I'm seeing from my lens.
Yeah.
Is that willingness to do the hard thing. And it's challenging. I'm not going to lie.
I couldn't agree more. And, I think Hiten from Rise Robotics said, when he and I shared a stage a couple of weeks ago, and he said that he spent 75% of his time, working on the campaign. And when you're fundraising,
and he was hugely successful.
Yeah. Yes. And it's not so dissimilar if you're, looking for fundraising through VCs or private equity either. And that's my next question I want to ask you is, are you seeing any sort of transition or thought along the line of the venture capitals or even angels using the crowdfunding as an opportunity to de-risk their investments as well, or they're not making investments until they see a successful campaign because then it's built a community? Are you seeing anything around that?
It's still hit and miss, right? I'm not going to lie. I'm not going to suggest that there's an overwhelming trend, but we do see more and more VCs at least tolerating it, right? I don't think we've reached a point where there's a consensus that they will look for a successful crowdfunding raise as a sign of future success. I think they should. It isn't solely, the trigger. I think that's appropriate. There are some firms that have mastered the art of marketing to the point of marketing bad deals. I've seen that. And it worries me a little bit because I think it hurts the industry in the long run. That said, I think more and more VCs are seeing the opportunity and are also encouraging their portfolio companies to do a round for the sake of building community. Substack is the best example of that, right? Substack did a $5 million raise in 24 hours, right? Because they had thousands of people who are making money on their platform.
Yeah.
And they said, we're going to do a WeFunder round. If you'd like to participate, here's the link, do it.
Yeah.
sold out with one email going out to their community. And I'm on, I'm on Substack. I got the email. By the time I decided to go take a serious look at it, it was sold out. I could not get into the deal. But they had raised tens of millions of dollars of venture capital before that. They didn't need the money. But this was a way of locking in their community and building that relationship much deeper. It was brilliant.
That's cool. Yeah. All right. So let me get you out of here on this. You've got a lot going on, Devin, between, Superpowers for Good. You would just finish Super Green. You've got the Purpose Built 100. You've got a couple of conferences coming up. I'm a part of one in August, even. You're planning so far ahead.
Yeah.
What are you most excited about in the coming 6-12 months?
Yeah, I'm really most excited about the Purpose Built 100. It really is exciting for me. I was really surprised when I did the research. No one else is doing this ranking, and it needs to be done, right? We really need to be celebrating the fact that there are high impact solutions that are profitable businesses that are rapidly growing. They're scaling, because that will attract more capital to this space and help us create the future we want instead of being mired in the problems we have. We can solve them.
That's awesome. Well, I really appreciate you joining me today. I thank you for all that you've done for me, for TAG, for our clients. And I'm really thankful for this relationship.
Well, thank you, Justin. It's an honor to be with you. Thank you so much.
Well, on behalf of my guest today, Devin Thorpe, you've been listening to the Tagline Podcast. Until next time.